Okay, it is a Monday, so you know what that means. We only got 2 minutes left in this segment, but that's all right because we're going to have him on. Taking a look right now on the newsletters tab is the Mastering Probability newsletter by Steve Rhodes. And we've really enjoyed having Steve Rhodes come on. I think what he's been talking about recently that's been very interesting to me is VIX being in contango. Of course, we had an elevated VIX for quite a while, and now we're seeing this kind of move downward, that 23 area right now in the VIX. Steve, how are you doing? Are you with us?
Yeah, I am doing great. Jacob, yourself?
Doing well. Quite a restful weekend, and I'm ready for the week. So how about you?
Good. Glad to hear it. No, nice weekend. Look at the weather down here. I've been in Florida for 43 years now.
Yeah.
This was the best winter that South Florida has ever experienced. And what I mean by that is most mornings that we woke up, it was in the maybe upper 60s, lower 70s, never got really much above 82 or so during the day, lack of humidity. Now it has shifted, and we've also had no rain. It's like been a drought in Palm Beach County. And but now the rain has started. We're having some thunderstorms today, a little bit yesterday.
Fantastic.
So I'm hoping summer isn't here just yet. But if it is, it is. And tonight, 8 o'clock, you don't want to miss the Panthers Toronto Maple Leaf.
That's right,
game.
Of course.
So I love it. But hey, you were talking about love, or you're talking about Southwest.
That's right.
The LUV is a Turkish symbol. I've got it. I posted it up on the screen here. It's feeling a lot of love. It's been up for 8, 9. Today's going to be the 10th consecutive day to the upside. But what it's going to do here is going to generate at a TD9 count top today. It says we have a top either today or tomorrow, with the weekly time frame chart being right up at resistance. That's where the sellers are at 3067. So it's kind of a nice segue into what we're going to talk about.
Absolutely.
During the next segment.
Steve, please stay right there, folks. We'll be right back with Steve Rhodes after the break. Welcome back, everybody. This is Jacob Shoup watching the Tom O'Brien Show. We are joined right now by Steve Rhodes. Steve is the author of the Mastering Probability newsletter. He's also the host of the Trader's Edge on at 11 a.m. Eastern Time right here on TFNN. Steve, I know we were taking a look at Southwest level a little bit. You're saying you're making a TD9 count. Might suggest we see a short-term topping pattern in the equity. What are we taking a look at now?
Today or tomorrow. So we're going to kind of focus a little bit on the TD9s because they're pretty much everywhere. But
sure.
As you've mentioned many times, the newsletter Mastering Probability is very thorough. It covers so many different instruments. Covers all of the equity futures, all of the major commodity futures, even minor futures, if you will, the soft commodities. Wheat, soybeans, coffee, sugar.
Yes.
And each daily newsletter, daily and the evening, I do an update in the evening, comes with this one table here. And this is a really important table for anybody that is trading either the sectors inside the S&P 500 or the index ETFs, because what it's providing you with support and resistance. And those for the daily, weekly, and monthly time frame. So what people should do right now is just grab a copy of this page here so that you can understand where support and resistance is at. And support and resistance being profile levels. They say as well as our oscillator and change line, and down below is really the SPY chart matching what is up above. So if we really start taking a look at the SPY here, what we'll see is today is going to become bar number 9 of a TD9 count, much like in the case of Southwest Airlines or Love. That says that today or tomorrow will complete the pattern. I don't know if price is going to move higher or not. It can move higher out there, and that sets the top. But if we take a look at the daily SPY, you'll see that today's going to become bar number 9. At the same time, the weekly chart is right up at resistance. It's that oscillator and change line. Again, this data is included in that table that I provide to subscribers every day, so they know where support and resistance is at. We need to know where support and resistance is at. Now, knowing that the weekly is up against a sell zone on its weekly profile between about 566 and 578. As well as price testing that oscillator and change line and not closing above it, pretty good indication that we're about to experience some type of top. Now, is it a top that's going to last just a couple of days, 1 to 4 days out there? That I don't know, but we are certainly getting the signals from the the SPY that there is a top. Well, if we say, and we don't just pay attention, I just don't pay attention to just the SPY or just the ES Mini. Instead, what do the primary instruments that represent the S&P 500 communicate? When there's synergy, it's really worth paying attention. So for that, I'm using the S&P Cash Index That'll confirm a TD9 count top today. The ES Mini will confirm a TD9 count top today. We already covered the SPY. And then there's an all-important equal-weighted ETF. What are the equal-weighted ETFs doing? Well, in this case here for the S&P, it's the RSP. And that also is going to go ahead and confirm a TD9 count top. Now, the downside levels here to be watching, so people can take a snapshot of this screen. The downside level, and that says that, now remember, this pattern does not complete till tomorrow. So we could see a rally tomorrow. If we see a rally tomorrow, that doesn't mean that these patterns have been negated. The first downside targets are going to either be profile levels, if we have them, such as we do for the ES Mini and the SPY and the RSP, or the oscillator and change line, which for the S&P cash index, that becomes its price target, which right now is about 54.62-ish out here. So you've got the SPY that's saying we've got a top. Well, we don't want to stop there. What's the Russell telling us? Here's we've got the Russell 2000 cash index, the equity future contract, and the IWM. What we'll see here, and this is the cool thing, is that they complete TD9 count tops today. They are a day ahead of the S&P and the NASDAQ, and they are 2 days ahead of the Dow. So what's cool about this is that we don't know whether these patterns can fail. But the cool thing here is if it's going to fail, if we see a close above the high of the pattern, which at this stage here right now looks like it was Friday's high for any of the Russell 2000 instruments out there, if we get a close above that, let's say tomorrow, it negates these signals and tells us about a strong upward momentum move to the upside, which will probably assist us with regard to the other instruments. What other instruments? Well, here's the NDX 100 charts. And again, here I've got the NQ, so we've got the equity future contract for the daily time frame. We got the NDX cash indice, we've got the QQQ, the ETF, and we have the equal weighted version. All of these have TD9 count tops that are going to form today, complete tomorrow. Downside price targets become profile levels or their oscillator and change lines. Let's not stop there. What was really interesting as I worked on this over the weekend and sent out an update yesterday afternoon. And the update yesterday afternoon was expect or anticipate a short-term top, or at least some type of top inside the market. The piece of the puzzle that was missing yesterday, Jacob, was the Dow. And what the Dow needed to do was the Dow needed to trade higher. The Dow needed to at least tick above Friday's high out there in order to generate bar number 8. Well, it successfully did that today. Yeah. And on a TD9 count pattern, the high or low, in this case here, we're talking about tops, needs to be on bars 8, bar 9, or the bar following 9. And 90% of the time that we have a successful bar 8, meaning it's the high of the pattern, we'll go ahead and complete a TD9 count. So now we've really got synergy out here amongst all 4 equity future contracts that really suggest that we should be seeing some type of short-term high or low. The duration, well, that we don't know. We'll come back to the duration in a minute. Every day, every morning, every evening, included in my updated newsletter, includes this chart here. People should grab this as well. This is covering, you see all the instruments that are covered here. You got the top 10 NDX 100 stocks, top 10 Dow stocks. You've got the index ETFs. You've got their support and resistance levels. You also have the automated trading outlook that I have for the daily time frame. For example, the ES Mini is in a consolidating bearish position. The NASDAQ is saying its bear market is over. So it comes with all this information. If we've begun the next leg in a bull market, because then what we should see here is only a 1 to 4 day pullback. And here what I'm taking a look at is the bottom portion of the screen here, Jacob. What it's doing is taking a look at consecutive days higher closes and consecutive lower closes out there. The red digits being consecutive lower closes, the black digits being consecutive moves higher out there. And typically in a bull market, what we will see is we will just see a pullback of 1 to 4 trading sessions. So that's what people should be watching for out there. Right. If we get more than 4 trading sessions consecutively to the downside, that suggests that, maybe that bull market hasn't really begun, the lows that we saw back in April the 7th out there. This is the 97-year post-electional seasonal cycle for the S&P 500. And even this, over 97 years during the post-election period, that red vertical line is where we're at right now. That shows that we should experience a top top within the next couple of days out here. So even the seasonal is lining up with what is it. Now, this suggesting that it's really just a short-term top, that we get a bit of a pullback here, and then really we just kind of slide sideways before we head higher into about the end of July, early part of August timeframe. This is the 97-year seasonal cycle that's not post-election, just each year over 97 years, the so-called sell in May cycle, if you will,
yes.
Jacob. And even that shows that we should form some type of top by the end of this week, move lower into the end of May, so maybe a 3 to 4 week pullback, and then continue to move higher into the summer.
Yeah, fantastic. There's a lot of, we've been following the volume, at least in the SPY recently,
Yes.
and we've kept pushing higher, but it just seems like it kind of contracts, or at least it kind of shakes out to not be as bad when you look at it in the past. But even today, you don't have a ton of volume moving up out of these, these near-term lows. But Steve, always fantastic look at this. Do you have any more you want to speak about?
No, the only thing I'll throw out there is the only international daily topping pattern that we've got out there is a Shanghai. So this is telling me that we're not at a major top. That's really the last thing I'd share.
Thank you so much, Steve. Looking forward to see you tomorrow at 11 a.m.
Great. Thanks, Jacob. Have a great evening.
Take care, Steve.